Welcome to Digital Asset News, or Dan for short. My name is Rob, and today we need to talk about why I'm voting yes to the FTX and the Voyager acquisition. It really just comes down to the basics, which is percentages: 0%, 50%, or 72%. Then we're going to talk about how this is going to be calculated as far as what Voyager holders can potentially get back and how it's all going to come about. Then we're also going to talk about letting people off the hook or not, as far as who is going to be held liable for this, CEO and COO. And these are just some of the things that are going on behind the scenes. And this, to me, looks like a decent deal, but there's a problem. The problem is that FTX might be insolvent. So we'll take a look at where this is coming from, and also take a look at some very funny things about what FTX actually supports and what it doesn't. So we'll go over all those things, and then I just want to lead off with that story. But just remember that there's a lot of good things going on. We'll talk about that in a second, which is Meta just put out a tweet. It said that on Instagram, you're going to be able to mint and sell NFTs using Polygon and Solana. So there's a nice little partnership there. Also, 401k holders, they're going to be able to put retirement money into crypto, and that is from Fidelity. Oh, and speaking of which, Fidelity just said today, hey, come on in for all the investors as far as retail. We're going to give you commission-free trades. And then we're also going to talk about, lastly, about why crypto is going to be so darn lucrative and attractive to a lot of Americans and middle class, because right now things are being ebbed away. So we'll do over all those things, but first let's get into the main story itself. Well, that's not it. I don't want to talk about that one. So Voyager. We know on this channel I've talked about it quite a bit, extensively, because I thought it was a great platform, and it was great. Unfortunately, there was mistakes made. CEO made a very bad decision. COO collaborated that, and they lent out a boatload, $640 million or so, to Three Arrows Capital. And that is a huge problem. And of course, Three Arrows Capital went under, and that was it. Once I got wind of that, of course, you can see there's a link in the description where I talk about 2 weeks prior to that, when I found out about that loan. I said, hey, I can't have this happen. I can't have people use the platform itself. And very simply, I put out a video, and I said, this is the time to take off all of your crypto. And speaking of which, there's these rules that I'm always talking about, where I say, hey, it's all gone. Don't invest more than you can afford to lose. Everything's a scam until proved otherwise. Don't leave anything on exchanges. Don't use leverage, and take profits along the way. And then from there, on June 22nd, I put out that video and said, I'm going to still use Voyager, but I'm taking all my crypto off. And I told you how to do it. You can go to Dan Teaches Crypto, use a ledger. And 2 weeks later, they stopped all withdrawals. So yes, I can say that I can wholeheartedly come out and talk to you and say, yes, I recommended Voyager. I believed it was a good platform. But when the facts change, I change. And that's really what it comes down to. So here's what we have as far as the report for what's going to happen. So first of all, I think most people know this, but I keep getting asked questions about which way I'm going to vote, which way I'm going to do things. I can't tell you what to do. I'm not a financial advisor. I'm not your dad. So, you have to figure out what you want to do. But for me, I'm tired of these shenanigans. I'm tired of dealing with this. I just want out. And for me, I'm just like, give me as much as you possibly can. So here's what it comes down to. This is a document. It was put out by the UCC and the acquisition team. And it looks like you got two options here. And this is what they say. As far as a liquidation recovery, meaning you go from Chapter 11 to Chapter 7, I believe it is, where there's just liquidation. They liquidate everything. You could potentially get half to 60% of the value of your crypto back, whatever that is and what they determine. I'll tell you about it in a second. Or the projected plan recovery is 72%. Look, I'm not a math genius, but I think I'd rather have a little bit more than 51% or 72% and go from there. That's just me talking. Maybe I'm different, and people will say, well, what about these cryptos that they're going to give us back, or the amount? Well, first of all, just know this. The question that came up is FTX, which is what one's going to acquire, is FTX US acquiring the crypto at the July 5th price, which is when they shut off withdrawals, price, the 20-day average as of September 29th, or at a future price. Under the plan, FTX will acquire the crypto at a to-be-determined price based on the fair market value of such cryptocurrency during a 20-day reference period, which will be determined prior to closing. So they're going to ask you to vote on this plan before November 29th. And you can do so. There's a couple of different places that you can follow. One of those is the Voyager UCC, the Committee of Unsecured Creditors. I linked this website in the description. Also, you can follow them on Twitter as well. Whoops, that's the wrong one. On Twitter as well, and you can follow them, and they give out updates. Or you can just follow me, and I'll tell you exactly what's going on. But as far as November 29th, that's when it's going to actually happen. And these are the things that they say is what it's going to be. So another big thing, another big sticking point, people came out and said, hey, what about the FTX token? Because I got to be honest with you. The people that were making the most fuss over the FTX token, the VGX token, were probably people who owned a lot of it. Let's call a spade. I owned a lot of VGX token. It's true. I don't really care. Keep it for all intents and purposes. But people were like, if you're not going to give us the fair value, well, they came out and said, yes, we're going to try to give you a fair value, and they kind of laid out what it was going to be. It's not, again, it's going to be based on all crypto tokens across the board that you have. So some people are going to take a bigger haircut than others, and that's just how it is. But again, 72% versus 50 to 60%. I'm okay with that. And that would lead me to my next point, which is this. Another big sticking point was, well, we really want to hold those people accountable for that wronged us. And that would be, of course, the most transparent person, or the most person in the public eye, which would be Steve Ehrlich, the CEO. And people were saying, I do not want to go out and say that I'm not going to let him off the hook. But you have to understand, is it financially inclusive for you to do so? And I'll get to that right now. So here's what we have. This might affect some people's decision, or it may not. It's up to you. So this was an email from the OCC, the Official Committee of Unsecured Creditors. Very lengthy, I will just tell you that. But what was important to me is that they said the UCC's decision with respect to release set forth in the plan was one of the most difficult. Release and part of Voyager's claims against its directors and officers. Because that was the big thing. Well, if we go this route, then we can't sue these two people. And that was a big thing. Importantly, the release and the plan do not release, diminish, or in any way affect any claims you, the government regulators, or any other third parties may have. And just as a reminder, the UCC is comprised of individuals that lost money, like you and me. UCC intended to vigorously object to the release of these individuals from liability. It was a UCC position then and is now. UCC is not going to engage in contentious, expensive, and time-consuming legal battles that drain estate resources and delay recoveries. The time for gambling with your money is over. Isn't it time? Let's be honest. Isn't it time we stop this much gambling, especially with Voyager, and held out and go, no, I want this perfect thing. No, I want you to tell me every offer that was out there. No, I want you to do this. No, I want you. I'm tired. I'm tired of this, and that's really what it comes down to. So the question you have to ask is, well, if I let them off the hook, what happens? Well, there's a provision. And first of all, what they said right here is, as far as like time consuming and draining resources, the same thing's happening right now over at Celsius. The Celsius UCC, again, Voyager Celsius, Voyager and Celsius use two different things, racked up $4.2 million in fees for a month. That's your money. That's my money. And then there's more. Mostly it's lawyers. And Aaron Bennett says here, we must get out of Chapter 11. And I got to agree. And then somebody Watkins racked up almost $1.8 million in fees for the Celsius BK in 6 weeks. Probably another lawyer. So if you want to drag your feet on this one, you can. I'm just not going to do it. So again, back to the investigation. The UCC investigation revealed that Ehrlich and Voyager's chief commercial officer were extremely careless. That's an understatement. In their investigation of Three Arrows Capital creditworthiness, and thus in their decision to loan almost $1 billion of Voyager's asset 3AC, $640 million, somewhere around there. Okay. UCC has concluded the debtors have valid and substantial claims against Ehrlich and CCO for breach of their duties. To ensure that pursuing litigation against Ehrlich is a worthwhile use of resources, however, the special committee did their job, and they investigated Steve and the CCO's personal finances. And what they found out was they don't have squat. They don't have enough for us to move forward and sue them. Both individuals provide written financial disclosures attesting to their assets under penalty of perjury. Neither Ehrlich nor the CCO have substantial assets that would justify the uncertainty and expense of protracted litigation over confirmation of the plan. Well, how much does he have? Well, apparently Steve's got $2.7 million, inclusive, meaning it includes his home. He's got $2.7 million, which to a lot of people, that's a lot of money. But for the CEO of a pretty big crypto exchange, centralized one, and one that came from Lightspeed and also was the ex-CEO of E-Trade, that's kind of light. Maybe I'm wrong, but that seems kind of light, which is less likely than the combined legal costs it would be to sue them. That's why they're like, look, this is what they gave us, and if you want to pursue it, it doesn't look like they have a pot to pee in, we say. And that's what it is. Is that right? Is that what it actually is? I don't know. I can only tell you what I can change and what I can do. And what I can do right now is I can vote yes or no. And that's really what it comes down to. However, there is a clause. So to get over this, in light of the limited collectability, the Special Committee Council negotiated a settlement with Ehrlich and the CCO. The UCC insists that even if Ehrlich's assets were as limited as he represented, he should not be given a release without making a settlement payment. So out of that 2.7 million, whatever it is, 2.7 million, Steve has to pay $1.1 million, which represents more than 40% of his assets. Despite the settlement, the wind-down entity will retain the right to prosecute claims against Ehrlich and the CCO for their role in the 3AC loan. So they're still going to be able to be prosecuted. However, the settlement requires Ehrlich and the CCO to forego and subordinate any rights they have under the policy of $10 million to collect. Settlement requires Ehrlich to subordinate prepetition claims he has against Voyager, blah, blah, blah. And then it goes on from other stuff. I'm not going to bore you with the details, but really what it comes down to is this. If they find out that Steve and the CCO are lying under penalty of law, then they're going to be able to backtrack that, and that's put in the agreement to where they can sue the pants off them. So that's what we have in that first part. So again, you know my position, and that's where we are. I don't care about the other deals. I don't care about things that are going on behind the scenes. Time to move on. However, there is a big catch, and this just came across the desk today. You may have heard about this already, but FTX may be insolvent. So this is from Dylan LeClaire. Seems like a pretty smart guy. Bitcoin Magazine Pro, senior analyst at UTXO Management, co-founder of 21st Paradigm. I think I put a link in the description for him. Actually, no, I don't think I did. Follow this guy. Let's see. Dylan. There you go. Let me save that. So this is what we got. Oh, and of course, forgive all the background noise, more construction going on here on our rental property. And I think I've talked about that before, so I'm not going to bore you. So here's what's going on. Alameda Research has 14.6 billion of assets. That's good. And they got 8 billion of liabilities. Hey, not bad at all, actually. You got 14.6 billion of assets, but you doubled that of your liabilities. Okay, so what's the problem? Here's the problem. For assets, 3.6 is FTT, or the FTX token, and 2.16 billion is FTX collateral. Do you know where the FTX token is? It is the official cryptocurrency of the digital of the FTX centralized exchange, and it's created out of thin air. It's a proof of stake. It only has value for what you believe it to have value. So right now, if you're telling me that a bunch of your assets is a token that could crash at the whim of investors, that's not good. So 3.66 FTX, 2.16 FTX collateral. They do have 3.37 billion in crypto. That's good. They have 292 million in Solana. That's not surprising, considering that Sam is a big proponent of that. However, almost $1 billion, or 863 million, is a locked Solana. I don't know how long it is locked up for. Hopefully, it's not like Ethereum where you can't unlock it until the Shanghai protocol comes out, and who knows when that's going to be. So I don't know exactly when and how long this locked Solana is, but if that is, that's a liquid, e-liquid. They do have 134 million in US dollars. That's good. A nice chunk of change, and 2 billion in equity securities. That's also good. I'll take that. However, most net equity tied is completely liquid altcoins. Oh, do tell, Dylan. Do tell. He says, for those unaware, FTX is the token issued by FTT or FTX. The total market cap of FTT is 3.3 billion, and the fully diluted market cap is 8.8 billion. Uh-oh. You can't sell 1 million of this thing without pushing the market significantly lower. Debatable, but could be, especially in this bear market. That's why there's OTC. We would see, not for sure. And also we know that Alameda was a debtor to Voyager at the time of the 3AC bankruptcy. And then, not to be confused, we know that Alameda is the investment arm of FTX, just so everybody's aware. Just how much USD is denominated liabilities do they have against that a liquid pile of assets? That's the big question. And then this was, I'll read this next part. Voyager's Chapter 11 bankruptcy file shows Alameda Research owes Voyager $376 million. The same company that we're hoping to bail out Voyager owes them $376 million. So again, not too good. And then this part I thought was interesting. Where it said, where'd it go? This one. We don't have insights into what the liabilities are denominated in, because they have a lot of liabilities, right? If it's US dollars, that's bad. Because if your liabilities is in US dollar, the dollar is the dollar, regardless of what people will say. Actually, the dollar's pretty strong if you take a look at the Dixie. So that's not good. If the liabilities are in crypto, well, that's not so bad, because crypto's been going down for quite a bit, and I think it could go down even lower. So if it's loan denominated in crypto, it's better, but it's still not great. So just be aware of that. So again, is this to say that FTX is insolvent right now? No, it's not what we're saying, but it is a concern because most of it is tied up in the token itself. Does that mean that people are going to rush out and sell right now? Probably not, especially as Sam comes out and starts to bail out a lot of different companies, Voyager being one and Celsius potentially being the second one. So that is what is going on. But there is one other thing that is odd to me, and that is that FTX, look how much their different assets that they support. It's quite a bit. I mean, we can just scroll down. Aptos, which was just listed, is already on there. Audio, RE, Bitcoin Cash, Bitcoin Social Vision. Look at this. Polkadot's listed there. I mean, just a boatload of stuff. Now, there's a difference between FTX US and FTX Global, but I did find it interesting that I think this is Polkadot, not listed. Aptos is already listed, and that's brand spanking new. Avalanche is listed. That's a layer 1 solution. But Cardano is not. Now, it has a futures contract that's listed in the global markets, but who cares? You know what futures contracts are good for? Shorting and destroying wealth. That's what they did in the CME in 2017 for Bitcoin. I just find it very odd that they still don't have Cardano, and Cardano's a top 10. I just don't get it. I don't know. It doesn't make sense to me. Anyhow, let me know what you think about that in the comments section, and that will conclude what we talked about as far as why I'm voting yes. Hopefully that makes it crystal clear to everybody. And then I want to just leave off with this. Again, let's focus on some good stuff, because yeah, Voyager sucks, but lessons learned, right? Even if you think that FTX is insolvent or something's going to happen later on, you can still use it. Maybe not the best idea, just warning you, but I still use it from time to time. But guess what? I have the ability to take things off. And that's the great thing about crypto. I'm not subjugated to a bank where you say, well, it's either this bank or another bank. I can take it off. I can put it in a nano ledger. There is no middleman. That's the beauty of the blockchain. I think people that they just kind of misinterpret that whole aspect. It's not another form of payment like PayPal. It's eliminating all these middle people, and I can do what I want. I can send you right now, put in your Bitcoin address. Maybe I'll send you some Bitcoin. I could send you $1 million with it. I could send you $1 billion with Bitcoin right now. I don't have $1 billion, but I could, and no one would question me. No one would say, hey, we need you to AML and KYC that. hey, we're going to put a stop on that before we review that. Or, hey, it's going to take 2 to 3 business days because it's a wire. None of that stuff happens. Crypto is in its own place. So let's focus on some of the positives, which is, this just came about. I think people will be talking about this pretty bigly. NFTs and Meta, and they've chosen Polygon and Solana. I can go with that. I mean, I'm a big fan of Polygon. Solana, I own some, but I'm not super excited about it, especially all with the VCs and the centralization and the hiccups that they have as far as the blockchain. Just not. Solana's not going to change the world, I don't think. It could change your pocketbook, but that's about it. And then Polygon, I'm a big fan of what they're trying to do as far as like make transactions cheap as possible. I know Ethereum people, some people hate it, some people love it, but it is what it is. And now, of course, you're going to be able to mint and sell your NFTs on Instagram. I think that's a pretty cool integration. That's going to get people talking and lead to mass adoption. Also, like we talked about in the beginning, retirement money into crypto, 401ks from Fidelity. And Fidelity, again, is now they're offering all their retail customers commission-free crypto trading. I think it's just for Bitcoin and Ethereum. I'm pretty sure. And remember, Fidelity has a nice chunk of change of $3.6 trillion of assets under management. Correct me in the comment section, but they've got a little bit of a pull. And why is this all important to me and to you? And why is this good news? I think it's because of this article. This is from Bloomberg. The once-in-a-generation wealth boom ends for America's middle class. I think this is false. I'm going to tell you why. This was it's a long article. I'm just going to give you the highlights. Conclusion of a Bloomberg News examination that paired new wealth data with an exclusive Harris poll of 100 million adults who sit at the core of the U.S. economy. And what it came down to is this. This is the value of the middle class as defined by how much your net worth is. And of course, in 2017, you were looking at around $270,000 was what your net worth was, which is pretty good. I mean, pretty darn good. I mean, across the world, right? Then, of course, we were going up. We raised above 320 or so. Then the pandemic hit, and then we went down. And, of course, with the quantitative easing and, of course, some other things that happened, we peaked out at around $375,000 or $380,000. That was the peak of how much the middle class, their net worth actually was. There's two things to note about this. To be middle class in America, it's more about salary or wages. It's more than salary wages. Real economic security is driven by wealth and the ability to both access it and pass it on to the next generation. That's what I was talking about with crypto, Bitcoin, digital assets. You can access it anywhere. There is none of this middleman. Of course, you can pass it on to your kids and your grandkids and everything else, especially in a trust. That'll be a little sticky, but you can do all those things. And there's no wealth tax as you transfer things over. Just let me know. Now, when they redeem it for dollars, it will, but that's not the point. So moving forward, gets kind of boring here. Where does the net worth come from? You know where it came from? Real estate. From the houses that people owned. And it wasn't like they owned it outright. They still have mortgages. But did you know that was in the past 5 years, that is what brought people's net worth up. It wasn't because of their fantastic investments or their business savvy or the things that they did behind the scenes. It was just because the price of their house went up. That's scary. And that was the total was $17 trillion. Owner-occupied, unrented real estate. Owner-occupied real estate by the person. That's what brought our net worth up. Pensions, like we just talked about with Fidelity, $13 trillion, all right. Business, rental properties, dollars, a little under $10 trillion. Net retirement equity investments, which is a pretty good idea to invest into, not financial advice. But it's only $3.5 trillion roughly. Cars, boats, jewelry was $3.2 trillion. That's laughable. Cars depreciate like crazy. Boats, same thing. There's two happy times in a boat owner's life: when they buy the boat, when they sell the boat. That's about it. So when we take a look at all these things, I think moving forward, people are going to be a little bit more excited about crypto and digital assets. Now, does that mean that mass adoption is coming? No, but if you take a look at the things that are happening in the equities market, I think it could be flat for a good 3, 4, 5 years. Where's the growth going to come from? Where's the GDP, especially with the Fed hiking up rates yesterday and trying to crash employment? I just don't see things. How can we grow in the GDP department when we got people unemployed and can't really do as much as they used to? Makes me think. So I take a look and say, well, why is BlackRock and why is Fidelity and why is Meta and why is NY Mellon or BNY Mellon and NYDIG getting into crypto so heavily? It's because I think they know where the next leap is. It's not the dot-coms, that's already passed. I think this is the next part. So anyhow, so that will conclude today with the news. Sorry I was a little bit long as far as like with the Voyager thing, just had to answer that question because like you can bombard with it, but that is it. So look, if you like today's video, thumbs up and subscribe. It always helps. I appreciate that. If you're so inclined, stick around. We'll do a little Q&A. I'll answer all your burning questions to the best of my abilities. And this is my favorite part of the show. If not, I'll see you later. I appreciate you. Now let's get into a little Q&A. Go from there. Bop, 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 bop. And let's see. All right. There's a good question. MDMD. I think I answered this. Yesterday I asked a question about sweat. I still have a question about it. I'm in the